What's up guys, Sean here. Thank you again for coming back to the channel. I'm pretty excited about this video because this has been something that people have kind of been asking about and what I particularly invest in. I've been really trying to work on tweaking, actually consolidating some of my Questrade accounts, getting them into kind of simplified, easy, targeted sort of portfolio. So this is my first one. It's a portfolio that I set up just to kind of proactively try and get a little bit of interest on some of my money and to eventually put towards paying off the rest of the mortgage on this house. So rather than doing what we've been doing for the last few years, which is to save up kind of the max lump sum and throw it towards our house on an annual basis or maybe every 6 months, we are trying for the last 2 years of our term here to see if we can't grow this money and that way actually in effect pay down this last part of our principal with less money than what we'd be doing by just like directly paying the lender at this point. So today I just want to talk about this portfolio, some of the targets I've put in place, the plan that I've got in place to, just in case we run into some trouble, I won't be making any emotional decisions, hopefully, with this plan in place, but we'll talk about the goals, we'll talk about what's inside it, we'll talk about the management expense ratio, and yeah, some of those rules that I talked about. So let's just get into it. Okay, so let me just start by saying this is not financial advice. This is just what I'm doing, working for me. This is very personal. Personal finance is personal. So I don't want you guys to go out and say, well, this is the best mix, because you'll see it's actually quite different and it may not work for everyone. So this is just what works for me. So this is the first portfolio that I've designed with like a defined horizon. I put the horizon to the end of our mortgage term, which is 2 years from now. So it's a very short-term investment portfolio, and you might have some comments about whether this is as conservative as it needs to be. But I thought this would be good practice for managing the other portfolios as well, which I'm slowly trying to consolidate and simplify and do something similar with. So anyway, the goals of the portfolio, let's just jump right into it, right? So the goal of the portfolio is to pay off the house by the end of 2022. I need to have put together $62,020. Total deposits that I've made to this account over a few months now, total is $55K, and I'm not going to be depositing any more now. I'd need about a 6 to 7% per year return for 2 years to make this goal. There's 3 stocks in here. We'll talk about them, but VSP.to is going to be the largest. So we'll get into that in the next section. I chose VSP because it's performed well historically. It did 15.2% in 2020, and it has some dips which are expected in US equities, but it kind of is a little bit of just my feel for how it's going to perform in the next couple of years. It is generally a long-term stock that I talk about holding for a long time, but this is my starting point for the portfolio. I always kind of start with this and then adjust a portfolio of 100% S&P 500 companies and adjust from there. That's my starting point, adjust from there. So VSP is generally kind of a long-term index fund that you would hold, but that's always my starting point because it's kind of my benchmark. So I start with a portfolio that's all VSP, and then I add things in there that I think would enhance it. Okay, so what is in this portfolio? It's basically 3 ETFs, but it's heavily weighted on VSP for reasons we kind of just discussed. I have to make a guess as to what the stock market will do, and of the 3 equities, it is the best performer. VSP is the best performer, and with trying to kind of navigate COVID, I don't feel that Canada or emerging markets will recover as quickly as the US. So that's why I kind of chose it, and for a 1 to 2 year window here. Now there's a general feeling that the reason we were able to recover so quickly last March was because of countries just printing money, which I'm not going to say is false, but I would expect that some of the folks that kind of dumped a bunch of this money into the stock market will start to draw some of it back as things sort of return to normalcy. And I'm not expecting the S&P to do another 15% year, but I really just don't see, from the point we're standing out now, almost making it through to the end of this, I just don't see the economy performing negatively because of that. So I do feel in the short term, there's still a couple good years left in the S&P 500. And so while it's a bit risky, still chose it to make it the majority of this portfolio. The other ETFs in there are for Bitcoin, which I I'm sure everybody on this channel is quite familiar with. I'm getting exposure to this through BTCX, which is the lowest MER version of a Bitcoin ETF that I could find. And I just put a small amount in there. CI Galaxy is about 4% of the portfolio. It's been performing actually quite well, being about 10% at the time I recorded this video. I've also layered in 8% of this portfolio to be the NASDAQ 100. Historically, this is a little bit more volatile than the S&P 500, but as long as tech stocks continue to perform well, this will also kind of outperform the Vanguard maybe for the next couple of years. So I've certainly added a little bit of volatility to this one, but I'm willing to take that risk. Now, as far as the MER goes, I'll just show you guys how I calculated it, but the Vanguard ETF is about 0.09%. The other two are at about 0.75%, but make up such a small amount of my portfolio that the overall MER for this portfolio is 0.17%, which is quite reasonable. Now let's talk a little bit about managing that risk. Now, I totally understand that this is a short window, and if you ask other financial planners, they would probably put you in something a lot more conservative with a lower return. But also consider that some other people might tell you to invest in individual company stocks, which I feel are a lot riskier than investing in an ETF. VSP still has that diversification and survived 2020 really, really well. But I 100% agree that this is risky, and right now I'm willing to take the risk, and that's mostly due to putting myself in a good position financially with an emergency fund and that kind of thing, and also setting up some rules, which we'll talk about in the next section, so I don't make any emotional investing decisions should things not pan out the way I want them to. My plan is to sort of let this ride until the end of the year. I'm going to reassess probably every 3 months, 3 to 6 months, just to check in and see how it's doing, rebalance if required. And then if we get to sort of the end of the year and it's doing really well, I will start looking at rolling some of this off into cash and getting more conservative as we go through 2022 so that I'm in a good position by the end of that year to achieve the goal. All right, so just let's talk about some rules really quickly. So the first one is, what happens if this portfolio drops 10%? So that would make the value of the portfolio drop to about 50K. So these rules are set up so that I can still achieve my goal. And what I said, if that happens, is I'll actually pull this money out and kind of say thanks but no thanks. That would still give me some time to pull money together and be able to pay off this lump sum at the end of 2022 just by saving money. Hopefully, though, that doesn't happen. Now, the second rule is if the value of this portfolio goes up by 13%, putting me at that target of $62,000, before the end of this year, I'll also consider starting to pull some of that cash out and putting it in something conservative earlier than planned, just to make sure that it's still there by the end of 2022. And then if I land somewhere in between, I'm going to reassess this portfolio every 6 months and just adjust accordingly and do something in the middle to make sure I hit my target. So there you have it, guys, a very simple 3 ETF, 3 index fund type of portfolio. What do you guys think? I'm definitely open to feedback. Do you think it's too risky? I'm also interested to know what things you guys all invest in when you are looking for something more conservative, because I will be coming up and thinking about that and at the end of this year for this portfolio. What do you guys have that maybe gets you more than that 2 to 3%, but probably less than the 5 to 7? Somewhere in there would be kind of a nice sweet spot for me to invest in. So if you have any ETFs that you guys use that have performed like that are more conservative with more certainty, please let me know. The next one that I'm working on, I'm actually going to be working on my RRSP and doing something similar, trying to take the Questwealth aggressive growth account and all those equities and simplifying them into just a handful of ETFs to see if I can't just manage this myself. So stay tuned to the channel for that one. We'll continue to consolidate my accounts. I'll keep you posted. Until next week, guys, have a great week. Spread the wealth. I'll see you in the next one. Bye.